we don't understand the history of banking, I feel that we are doomed to repeat many of the same mistakes, just with a different asset, and perhaps in a slightly more theatrical and entertaining way. While I appreciate that the arc of time is long and there is an evolutionary component to what we're doing, if we don't stay honest with ourselves about what we're building here, then what we're building is going to be no different than what we've had for the last 500 years. And that's not why I'm here. Do we all want to get rich, or do we want to get free? Hi, my name is Meltem Demirors, and I'm the Chief Strategy Officer at a digital asset management firm called CoinShares. Before CoinShares, I built a business called Digital Currency Group that was also an investor in the digital currency space, where we invested in companies, we built companies, we also invested in digital currencies. Prior to all of that, I was doing something very different. I was in the oil and gas space, primarily focused on oil and gas exploration, production, and M&A activity. And so I lived a very different life, where instead of operating in this digital realm, I was on oil rigs in refineries, looking at pipelines and thinking about how to finance very expensive, very ugly infrastructure projects. So very different. The world is such an interesting place right now. There's so many different things happening, but what I think we're really seeing is the beginnings of a revolution. Trust is at an all-time low. People no longer trust institutions. I think over the last 10 years with WikiLeaks, with revelations made by Edward Snowden, with the leak of the Panama Papers just 2 years ago, people are becoming increasingly aware of abuses of power at the highest levels of government, at the highest level of institutions. But it's happening not just at that high level, but at local levels as well. And I think generally, the ability for people to access information anytime, anywhere through the internet, the rise of social media, the rise of the democratization of information, but also the increasing balkanization of the internet and how people aggregate and congregate in the way they think has led to some really interesting tensions. We're seeing those tensions now boil over. We saw Brexit happen. That was an event I think no one would have anticipated 5 years ago. We see what's happening in Hong Kong today. We just had the first protester fatally shot in that sort of ongoing escalation of tension. That's been an interesting thing to watch. We see what's happening in Venezuela with the Maduro regime being toppled and some of the tensions there. And here in this country, our sitting president is about to be brought to trial as at the start of an impeachment hearing. And so the world we knew 5 years ago is not the world we live in now. I think for a lot of people, the question is, what next? And we see this in global markets. Markets are in turmoil. There's a lot of uncertainty. There's a lot of fear, and there's a lot of doubt, which we call FUD in my industry, so fear, uncertainty, doubt, or FUD. And I think anytime you have a lot of fear, uncertainty, and doubt, you see really strange things start to happen.
How are past civilizations the prologue to Bitcoin?
So before we talk about the history of money, it's just interesting to think about the history of human society and human organization. So when human society started, right, we were nomadic, we were tribal, and you would only really have contact with a small group of people that were in your nomadic tribe. And then people started to intersect with other nomadic tribes as their world started to expand and become bigger and bigger. And when that started to happen, you started to see the emergence of trade, right? So you had bartering, then you needed trade. When you have trade, you need a universal medium of exchange. So you saw people using different things for money or to exchange value, salt, shells, other different assets, things that were valuable, things that were useful and had utility at that time. And then as you started to see the rise of more agrarian society, as you started to see new means of production emerge that allowed larger populations to exist in the same physical footprint, you started to see the emergence of monarchies, right, or kingdoms, and really the first form of social organization. And I think an interesting thing for me to always go back to, because I think history is such a great guide for us, and unfortunately, what little we have to study is fairly limited, but it gives us great insights. There's this great a great idea called the Kyklos cycle, or the Polybius cycle. And it's basically this concept of these iterations of human organization that we go through. So it starts with monarchies. So you see a ruler or a leader emerge. Typically, they assert their sort of leadership by printing their face on a gold coin, right, or some form of exchange. Then that monarchy sort of continues to grow and grow. Lineage passes the monarchy from the parent monarch to the child. And historically, in our world, those have all been patriarchal monarchies, right? So we see this sort of monarchy in this lineage. And then the children and the children's children start to sort of lose the original ideas of the republic or whatever this civilization was all about, and some of those principles, and we can talk about growth and principles. And then you start to see it go into more of a tyrannical sort of leadership. And then all of the oligarchs, or the wealthy merchants, or the people of the ruling class just right below the monarchy, kind of rise over and overthrow these tyrannical despots, the children who have gotten lazy and spoiled, and they take over. And then you see the rise of an oligarchy. And then that descends into tyranny again. Then you see the rise of yet the lower rung, or kind of the middle class, in the form of a democracy. And that's really what America was at its beginnings. Right? It was this idea of, hey, we want to overthrow the monarchy and these wealthy oligarchs and create this new country that has different values. Then you live in a democracy for some time, and then the democracy starts to become more and more fragmented as different special interests take over. And then you get to the stage called ochlocracy, or rule by mob, which is about the loudest voices really ruling. And that's kind of the age I think we're in now, with Twitter and social media and the way information spreads, and the fact that most information is like factually incorrect, right, or based on loose assumptions rather than corroborated fact. We're kind of throwing all of these ideals out the window. And then ochlocracy eventually descends into just absolute anarchy, complete chaos, right? So this is where we go from an ordered system to a completely disordered system. And when you have chaos, there's a natural tendency for things to tend towards order again. And typically what you see is a reaggregation of power and the rise again of another monarch. And so the idea of this cycle is we as human civilizations kind of repeat the cycle, and each iteration we may do a few things differently. We may have different tools. So the world we live in now, we have very different tools than the world we lived in 3,000 years ago. So it'll be interesting to see what that looks like. But generally, I think a lot of the history of money is predicated by the needs of human society as we grow, as we expand, as we become more interconnected. And so it's been interesting to watch Bitcoin in the context of what's happening in our world. I think when you start to think about it through that lens of how humans organize and the tools we need to enable these different phases of human social organization, what Bitcoin means. Because it started with libertarians and anarchists, right? It's like money for the revolution, which was really fringe and out there. But as more and more people started getting into Bitcoin, the message became more socially acceptable. It became broader, it became more appealing. So in the 10 years that Bitcoin's been around, and in the 7 years that I've been in the Bitcoin community, it's been really interesting to watch the messaging and the principles of Bitcoin evolve and change as it needed to become more appealing to a wider and wider group of individuals.
How is central banking relevant to crypto?
I studied math and economics in university, and I was fortunate to spend a year studying in Cambridge in the UK, studying Keynesian economics and the history of the banking system and all of these things that if you work in capital markets, you you kind of know, right? That's part of what you need to know. What's so funny is crypto and Bitcoin has basically made it cool and sexy for an entire generation of entrepreneurs and technologists to learn about central banking, which is so hilarious to me. I think all of these textbooks that nobody ever wanted to read about like the structure of the modern banking system or market microstructure, people are now starting to understand. So in a way, crypto has forced an entire generation, my generation, millennials, to learn about how banks work. And so in a way, it's been really funny just to watch over the last 10 years, like the things I would talk about and think were fun and interesting have become topics of conversation we talk about online. I think that's fascinating, really funny. So if nothing else, an entire generation now understands banking and hopefully Basel III. Like that's the next step. I want to teach everyone about Basel III regulation and liquidity, but we'll get there eventually. Maybe too dorky. People are like, shut up, Meltem. Go back in your box. Weirdo.
Is crypto replicating the traditional banking system?
One of the things we like to say in crypto is down with the banks, or some people say short the bankers, and there are variations on this. Look, the world is changing, and that's something I think we all sense and feel, and it goes back to that earlier comment on fear, uncertainty, and doubt. We've gone from $9 trillion of negative yielding debt to now 15, 6 months later, right? It's pretty scary. Helicopter money doesn't feel like a pipe dream anymore. It actually feels like a reality. We have presidential candidates who are campaigning on a platform of helicopter money, which is fascinating, right? It goes back to Keynesian economics, let them dig holes, which is so entertaining. But what I think is really deeply troubling, maybe troubling is the wrong word. What I think is one of these ideological traps and one of these deep idiosyncrasies that we need to resolve is in the act of building tools and products and services that allow people to interact with Bitcoin, what we have effectively done is rebuild banks. And what I think is so deeply disturbing to me is the level of cognitive dissonance in the Bitcoin community when it comes to the reality of what we're building. So if the premise was that we wanted to disintermediate central banking and remove the power of banks, what we've actually done is just rebuilt banks in our asset class. So we recently did an analysis of all of Bitcoin in the world that's been mined today. It's about 18 million Bitcoin. Where are these Bitcoin now? So about 20% have been lost, we presume. About 7% are in custody with Zappo and or Coinbase, which are now one entity because Coinbase acquired Zappo's institutional custody business. About 1% is in the GBTC product. About 0.5% is in our product, XBT Provider. We have about 3 to 4% in exchange hot wallets, as far as we know. About 1% is in the Mt. Gox Trust. So Mt. Gox, as you recall, was the exchange that was hacked, and that Bitcoin is now sitting with a custodian as that court case gets resolved. And so when we tally it all up, about 18% of all Bitcoin in circulation, according to our estimates, is currently in the control of a third party. And it's probably more than that because there are intermediaries, that are unaccounted for. But fully 18% of this asset that has these really unique features around self-custody is in this central custodian. And what's really interesting to think about, I'm going to tie together 3 ideas, so bear with me here. So first and foremost, let's recall what happened in this country during the financial crisis in 2008. We created a new designation for banks called SIFIs. Right? And SIFIs were systemically important financial institutions. And SIFIs really, what that was intended to do is to sort of look at where risk in the financial system was aggregating and to ensure that those institutions were more responsible about how they manage that risk, but also that our government and our regulators were more informed about the level of risk in these institutions, right? So we see these SIFI risk composite scores getting published. And what's interesting to note is we also have SIFIs in in the crypto ecosystem, right? Let's talk about these custodians that hold really large percentages of the world's Bitcoin. Now, the other thing that's really interesting, so that's idea one, is like we have SIFIs in the traditional banking system. We also have them in crypto. Idea two, let's talk about bailouts. So in '08, when the SIFIs were in trouble, what happened? Our government bailed out these financial institutions by infusing capital into them and by lowering interest rates to spur more lending and basically trying to restart that economic flywheel, right? We've seen bailouts happen in the crypto industry as well. So if we take a little walk back to 2016, we'll recall in the Ethereum community, there was a new type of decentralized sort of fund that was created called the DAO, or the Decentralized Autonomous Organization. And fully 15% of all Ethereum in circulation at that time was invested into the DAO. And at that time, that was around $150 million. Wasn't a lot because the ecosystem was still teeny tiny. But fully 15% of all Ether in circulation was put into this contract. And the smart contract was not, audited very well. And there was a bug in it that allowed a hacker to exploit the contract. They used it in the way it was intended. So I refuse to call it a hack because it was just the smart contract being used in a way that it wasn't intended to be used. But hackers started stealing the funds in this smart contract. And so the Ethereum community held a vote and decided collectively that they were going to roll back the blockchain to a time before the DAO hack happened. And this is an example of what happens in a network that's supposed to be decentralized. That's one of the features we talked about, being actually quite centralized. And when something significant, economically significant happens to that network, a group of people who were quite powerful and held a lot of that wealth and had a lot of control unanimously came to this decision, and they basically bailed out all of these individuals who would have otherwise lost their money. So that's the first example of a bailout. So then I go to event number 3. In May of this year, in May of 2019, one of the largest exchanges, Binance, which is an exchange based in Asia, had their Bitcoin hot wallet hacked. So the hot wallet is where they keep funds that are sort of moving in and out on a daily basis. And then cold wallets or cold storage is where people store funds longer term, typically a lot more controls around moving those coins. But their hot wallet got hacked. And at the time, their hot wallet held 0.03% of all Bitcoin in circulation. So not a lot. And it was interesting to see when Mt. Gox got hacked in 2015, when it went bankrupt, right? Nobody talked about rolling back the chain. Nobody even talked about it, thought about it. But now that that idea has entered our consciousness, and now that it's been done in another network, one of the interesting things is people online were proposing, well, why don't we roll back the Bitcoin blockchain? This is the danger of ideas, right? And this is why history doesn't repeat, but it certainly rhymes. And so if we connect these 3 ideas together, ultimately that idea, by the way, of rolling back the Bitcoin blockchain, it was discussed. It was ultimately rejected for good reason, because it's a ludicrous idea and it would invalidate the entire value proposition of Bitcoin. But the fact that it was discussed and the fact that it was not immediately rejected gives me great pause. And so what I think is interesting as we look at what's started to happen, is we look at where I believe the future is going, because I work in this asset class and am building my career and sort of my business in this space. If we look where we're headed, if we don't understand the history of banking, I feel that we are doomed to repeat many of the same mistakes, just with a different asset, and perhaps in a slightly more theatrical and entertaining way. But it's important to look at what we're building and ask ourselves, is this actually any different? If we take 50% of the world's Bitcoin and we put it in custody with a custodian that's regulated by the New York Department of Financial Services, the Fed, and all of the powers that be, and we take these Bitcoins and we put them in a vault somewhere and we lock it up and we add security guards and all of these diversions and tricks to keep hackers out. And then we issue Bitcoin depository receipts, pieces of paper that allow us to trade the underlying Bitcoin sitting in a vault somewhere. But we never actually exchange Bitcoin on the Bitcoin network. is that still Bitcoin? These are the types of questions I want us to be asking. And by the way, as an asset manager, we are part of the problem, right? I don't claim to have a grand solution, but I think it's important to ask ourselves as the industry grows, as the industry matures, and particularly as many Wall Street types come into the industry who don't share our values, who don't share our principles. I like to say they're LARPing, right? They're live action role playing. I'm a gamer, so I'm going to nerd out a little. They're dressing up as their favorite crypto character, and they're like, I'm a crypto person. But in reality, everything they know, everything in their DNA, everything they've done is in the banking sector. What we're going to end up building, it's going to smell, it's going to look, it's going to feel, it's going to taste like a bank. It is a bank. It's not Bitcoin. And while I appreciate that the arc of time is long and there is an evolutionary component to what we're doing, if we don't stay honest with ourselves about what we're building here, then what we're building is going to be no different than what we've had for the last 500 years. And that's not why I'm here.
What attributes do gold and Bitcoin share?
Bitcoin and gold is, to me, a really fun narrative. And I think really Bitcoin and any commodity is a fun narrative to sort of go through. When we think about, at my firm, we all come from the commodities world. Oil in particular is what we all know and love, and where we all started our careers and spent a lot of our time. One of the fundamentals of the oil industry is the 3Ds, and my partner Russ Newton talks about this very often. He was an oil trader. The 3Ds are demand. So what is the demand for oil? Depletion, meaning how much oil is left or how scarce is it because it's a natural resource, and the dollar. Right. So what is the strength of the dollar? And since the dollar is heavily dependent on the price of petrochemicals, which are the basis for sort of the modern military industrial complex, there's this really important relationship there. So we have the 3Ds, demand, depletion, and the dollar. Same thing is true for gold. And same thing is true, by the way, for Bitcoin and every other cryptocurrency out there. When we look at Bitcoin, what makes Bitcoin fundamentally different is Bitcoin fits into the 3Ds very well. There is demand for Bitcoin from investors who understand the narrative around Bitcoin and the value proposition of Bitcoin. And that group of people today is fairly small, but it's growing. And one of the things I believe that I think is controversial is that Bitcoin will continue to be a bottoms-up, retail-driven movement. Has been from the start, will continue to be, because it's ultimately consumer sentiment and popular culture that will drive larger institutions to start engaging with Bitcoin. But until we reach that critical mass, there's really not a whole lot of reward there for a large bank to begin interacting with Bitcoin, right? So there we have demand. We look at depletion. Bitcoin has a known supply schedule, right? We know the rate at which new Bitcoin will be mined. We know that 80% of all Bitcoin that will ever be mined have already been mined. And we know exactly when those halvings will happen in the mining schedule. And so it allows people to model out supply and demand. In our analysis of supply and demand, one of the things we look at is all of the Bitcoin that's being mined that's already spoken for. So by our last estimate, when we looked at the amount of Bitcoin being consumed by our product, the Grayscale product, Square, right, where we have a lot of consumers buying Bitcoin through Square. Now SoFi, the lending platform, is adding a Bitcoin buy and sell feature. A number of other firms that are more in the traditional finance or fintech space are now entering this space. When we look at the demand for Bitcoin over the last 2 years or so, and we model out that demand staying constant in the future, half of all Bitcoin that is mined on a daily basis is already spoken for. So that's pretty significant in terms of depletion, right, and demand. And so that's an interesting thing to look at. And then the last component is the dollar, right? And this is where, as an investor and as the person who manages our investment portfolio, it starts to get really interesting. Today, the way we think about the dollar in the crypto world, people don't really talk about benchmarking very much. I run a CFO roundtable series where we get together and talk about these fun dorky topics like indexing and the opportunity cost of capital. But one of the things that's just starting to happen now is investors who started out in Bitcoin and then went, into the long tail of risk and reward with ICOs and these things very much further out on that spectrum, are now coming back and saying, wait a minute, what is my opportunity cost in Bitcoin terms of deploying capital into other crypto assets? So Bitcoin is becoming my benchmark rate of return for everything else in this universe, right? And so as people start to think about the opportunity cost of holding Bitcoin versus other assets, now we also see people talking about the opportunity cost of holding Bitcoin versus, say, equities or the US dollar or maybe gold. That's an analog we see a lot. I think that narrative and that thinking is going to start to mature and develop. And the more that gets popularized, the more investors think about it, and the more we frame it in that context, I think the more that then in turn drives demand.
How is owning gold and Bitcoin different?
One of the things I think is interesting about gold is there are different ways to get exposure to gold, right? So the way that most people get exposure to gold is through gold ETF, right, or a gold product. And basically the way that works is you're relying on someone else to hold the physical gold for you, and you receive a piece of paper or you hold something in street name that's tied to your account, right? There's zeros and ones in a database that say it's yours. But basically, you have effectively a depository receipt for gold somewhere, right? What I think is interesting is you also have people who hold physical gold, right? But traveling with physical gold is really hard. I was telling you this story of someone I think it was last week or 2 weeks ago, someone got caught trying to travel, I think, out of India with a suitcase full of gold. Someone in China was just arrested because they were hoarding, I think, 13 tons of gold in their basement, right? So physical gold, yes, it's valuable, and I think a lot of people want to own the physical gold and not rely on an intermediary. It's not easy to move. How are you going to dispose of 13 tons of gold? It's kind of like it's not really going to happen for you. I mean, flying across the world with suitcases full of gold sounds a little tricky, but flying across the world with a 24-word passphrase in your head that decrypts the key to a private wallet that holds $1 billion of Bitcoin, pretty easy. And so what I think is really interesting about gold and Bitcoin as analogs is gold is value in the physical world, right? And it has this cultural cachet, and so much of gold is not just about this 3Ds, but it's also the psychology of it, right? And the role that gold has in our history as humans, the role it has in our society and culture, and the physicality of it. I think Bitcoin is digital gold, right? It's the digital analog to gold. And what's so interesting is as our world in general goes from being physical to being more digitally driven, as we get more comfortable with digital value, which by the way started with domain names, right? I think about domain names as like the first iteration of scarce digital value because there were only so many good domain names, just like there are only so many beachfront properties in Malibu, right? Same thing with Bitcoin. There are only so many Bitcoin that are ever going to be mined. So I think there's this very strong relationship between thinking about the evolution from physical to digital and framing the evolution of gold to Bitcoin as part of that. And I think a lot of investors who are attracted to gold really understand the value proposition of Bitcoin as a digital analog to gold.
What's the next frontier in the crypto space?
I think one of the most interesting thoughts in the crypto space right now is how do we build the tools for the revolution? And that sounds a little bit incendiary and it sounds a little bit extreme, but I think a lot of what we're doing here is creating tools that empower people, that empower movements. And we are living in this really interesting time where historically the way we've expressed power and the way we've driven change in this world has been through force, right? Through physical force and physical displays of force. But what we're seeing start to happen as we go from a physical world to a digitally driven world that's interconnected, where physical boundaries and the idea of jurisdiction is no longer really relevant, right? What we start to see is much of how power will be expressed in the future is through control of what happens in the digital realm. And it's really control and command of our attention and our beliefs and our psychology. The next frontier, in my view, is the battle for our minds, right? Which, again, it sounds crazy. I read a lot of sci-fi. I have a great sci-fi reading list on my website if anyone's interested. It's a great way to time travel and explore alternate realities. But I do think what we're building, hopefully, is a set of tools that are part of a very broad set of tools spanning many different technologies, many different industries. We're building tools. But at the end of the day, tools are used by people. And I think one of the places where the crypto movement is failing to launch is in thinking about how we organize people. What we're trying to do is we're trying to create means for technical consensus, but it still requires social consensus. And so much of what happens in crypto is done face-to-face, and it's negotiated the way historically we've handled politics in every sector. And so what I think about is how do these tools evolve, how do these tools grow, but also how do we ensure that these tools can continue to propagate and grow without their original makers, right? And so if you think about the Bitcoin blockchain, it's almost become like its own sentient being in a way where it will just continue. Every 10 minutes, new blocks will propagate. And so it's interesting just to think about if these are tools for a silent revolution, if these are tools for a monetary revolution, if these are tools for a self-sovereign revolution, how do we need to build these tools to ensure that they can be useful for the purposes we wanted them initially to be useful for? Or how will that narrative change and get co-opted and evolve as more people, say from the financial services sector, start to join the industry and start to change and evolve where the attention and focus goes. And so there is this interesting sort of battle unfolding at the moment, which is, do we all want to get rich? Which I think a lot of people do. Like, let's be honest, a lot of people get into Bitcoin because they want to make money. Or do we want to get free? And they're almost on opposite ends of the spectrum. If we want to get rich, our best path is to just take all of the Bitcoin, put it in a vault, create paper receipts, and just let people trade that. And that's where I think institutional crypto is sort of this interesting misnomer because it's not crypto. It's just finance the way we've always done it. Or do we want to get free? And that's a lot harder. And that's a much tougher battle. But I think that's the more rewarding one. That's the one that excites people, and that's what captures people's imagination. And so watching that play out, what I always say to people is, The Matrix, obviously a great movie. I think for many of us, it kind of defined a generation. But everyone knows the scene in The Matrix where Morpheus approaches Neo, which is Keanu Reeves' character, and he says, you have two choices. You can take the red pill, or you can take the blue pill. And I think a lot of us who are in crypto believe we've taken the red pill. But in fact, we actually took the blue pill. So there is this great ideological reckoning that's coming. And it'll be interesting to see how it unfolds, honestly, because I see both sides of it. And I understand the incentives on both sides. But that will be an interesting ideological battle.
What's your broader outlook for the next 5 years?
I know a lot of people are living in this world of fear, uncertainty, and doubt, or FUD, where they think, we're overdue for a recession, we're going to have a recession. I actually don't think that's going to happen. I think the U.S. economy is going to continue to run, and I think we're going to see it rip like we've never seen it rip before. I think we're at the cusp of another 10-year uptrend, and there's obviously going to be some variance in there, but I think the uptrend is going to continue. Because frankly, if you look around the world, life is about choices and making risk-reward choices. And if you look at the set of things you can invest in, for better or for worse, the U.S. is still one of the best games in town. There's really not much else out there for allocators. So I think the U.S. economy is going to continue to run like crazy. What that means for 10-year yield, I'm not Sure. I think people are going to continue to find 10-year yields attractive. I think, again, looking at risk reward, it's something psychologically that feels safe. And I think safety in times of FUD is very important psychologically to investors, which is also anecdotally why I think gold will continue to do really well. I think the challenge with gold is the physicality of gold and the high-level centralization of gold is challenging. The other thing that's interesting to think about with gold is like the relationship between people who buy gold and people who invest in junior gold miners. So there is in gold investing also this interesting risk-reward spectrum. And so it'll be interesting to see what happens there. And then Bitcoin, I mean, the big thing I think about with Bitcoin and the reason I continue to accumulate Bitcoin is there's only so much of it that's going to be mined ever. We're already at 80%. And I want to own that. Because if I own it, someone else can't own it. The halving is coming up next year. Historically, around prior halvings, we've seen a rapid increase in the price of Bitcoin. Bitcoin is volatile, but if you buy it and hold it, it's a great investment. And so I'm a buy and hold type of person. That's what I've been doing. That's worked well for me. In terms of relative attractiveness, I really think it depends on the psychology of the investor. My generation, millennials, we are in debt. We are nowhere close to owning homes, and home prices keep going up. And there aren't really many attractive options for us to double, triple, quadruple our net worth other than crypto. And so I think we're going to continue to see my generation, the millennials, get excited about Bitcoin, want to hold Bitcoin. I think older generations who grew up in the world of Benjamin Graham-style value investing, who have long believed that passive index investing is the best way to grow wealth, who have been beneficiaries of an economy where home prices continue to go up in value and who hold a lot of their wealth in the value of their homes and the value of their stock portfolios. They're going to continue to invest in that because that's what they've known. But for my generation, we don't have that option. And by the way, when the boomers start to cash out because they need money to pay their medical bills and they start to pass wealth on to their children, it'll be interesting to see how the market reacts because I don't think the world of passive investing is going to stay as is. There are broader shifts happening in the world of asset management, the debate between passive versus active, the debate between value versus growth that's starting to sort of bubble up and change how people think about investing. So it'll be interesting to see what happens there. But for me, I'm Bitcoin first, gold second, and then treasuries are my last resort.
Hey there, since you got to the end, I'm guessing you liked the video. And that's probably because we don't just turn on a camera and film. We work really hard on getting the narrative flow just right. And that's why many finance companies are actually now hiring Real Vision to make videos for them. One of our recent client videos just hit 100,000 organic views on YouTube, and there were no kittens in sight. So if you want to find out how Real Vision can make a video for your company, just email us at customvideo@realvision.com.